Hello, everybody. We're about to start the session here for longer term, get together longer term session. Before I begin with the session itself, I would like to get a quick yes, hello in the comments box. If that's okay, that would help me to confirm that you guys hear my voice. We are well connected. Technology is good, so we can begin. So when you have a second, please, on the comments box, go ahead and type a quick yes, hello, or anything you could think of writing just to show we are connected. That would be great. Cool. Wonderful, guys. Thank you for that. So we are ready to get started here. Let's begin with the presentation of the session. As you know, we have a disclaimer as we begin, so let's get that out of the way so we can focus on the charts and the trading opportunities that we have in front of us. Okay. So wonderful. Thank you, guys. I'm receiving all your messages. That's very nice. So AutoUFOs get together longer term session for today. Today is January 31st of January 2019. My name is Jose Blasco. I will be your guide. I apologize in advance for a little bit of a difficult voice today. I may need to mute my microphone at times just to get a little sweet or something because my throat is a little not in the best shape. Let's put it this way. So bear with me on that, please. And let's go for the disclaimer. So the following videos, clips, and demonstrations are for educational and instructional purposes only. Predictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Here we go. So we got it. We got the launching part of the session, and this is now time to get in the charts and get a little productive here. Plan for a few trades. If we were to be very, very quick, maybe we could execute, but that's, I guess, going to be very tight. We got 30 minutes of market time, so realistically, I'm not too sure, but definitely at least leave a few trades planned for tomorrow, so as the market opens, you guys can execute those trades. Today, again, we are doing longer term, and longer term means that we are not doing intraday trading, so anything that will take a few days, a few weeks, that would be the goal. Okay, we're going to be dealing with options. You are probably aware, and if you're not, let me help you to be aware of it. We conducted the last Sunday to be precise, we conducted our first session on options trading. We'll conduct many more, and this will allow us to be more and more efficient. Okay, because if I show you the last trade that we planned the other day, the trade with Expedia, I'm guessing that some of you guys were with us here in the room as we were planning this trade. So this vertical line represents the day we entered the trade, and the two lines above and below represented where we didn't expect Expedia to go. And the fact is that Expedia did enter the bottom part that was not expected by a little bit, and Expedia today actually, well, yesterday as well a little bit, went in the upper part that was not expected either. Okay, so depending on how you treated this trade, you could have ended up in a profitable position or a losing position, depending on how you treated it. Okay, so if I load my Option Session Pro here, which will be up in a second, you will see I still have this trade in the account, and this trade will show a little bit of profit on my side, or at least I would expect this. And what I'm trying to say with all of this is that there are certain rules for management of positions, and again, depending on how you would implement all of this, you could gain certain benefits. Okay, but for that we need to spend a little more time learning options, etc. Okay, so here I got Expedia. You can see there is an iron condor with Expedia, and this trade is currently up $55 per contract. So again, depending on your style of trading options, okay, because I am aware that some of you are options traders, some of you are not, and therefore, depending on your level of expertise, you may have treated this trade in a more advanced manner or less advanced manner, and may end up or not in a profit or a loss. Okay, so we'll be talking about all of these. Okay, let me go ahead and and take a look at a comment here from Supply and Demand Trader. So Supply and Demand Trader says, I was topped out of the Expedia credit trade yesterday. I still made money. I love these trades where I get stopped out and I still made money. Okay, I love that too. And I mean, I love all sort of trades. You know, in the world of trading and investing, as you know, there are two main groups of trades: what we call directional trades and non-directional trades. They all have pros and cons, but certainly one of the great advantage of creating trades like the iron condors, it's the fact that time passing works at our advantage. Okay, and if you think about it, today we are in a very same position as the day we plan the trade with Expedia, meaning that today is Thursday. In other words, tomorrow is Friday, and that means that as long as you enter a trade tomorrow and you don't get stopped out tomorrow, now next thing you know, you are in the weekend, and you know, with no market risk, with no market movement risk, you get to enjoy 2 extra days of time decay. And because of all of this, next thing you know, you could end up like happened to Supply and Demand Trader. You could end up being stopped out. In other words, you reach this place on the chart where Expedia was not likely to go based on probabilities, but it did, because it moved aggressively to the downside and to the upside. It became quite volatile, and it did, but guess what? You still exited the trade with a small profit, but what a beautiful thing to be done when being wrong in a trade and still ended up with some sort of a profit. Okay, that's really beautiful, and I can totally see why you love it, Supply and Demand Trader, and of course, I think you are not the only one loving this style of trading. Okay, so thank you for sharing. And also love to see the fact that you are being very committed to your trading, to your business, and the moment you are given a market opportunity, which in this case we plan here together, you are diligent and disciplined and professional in the sense that you go ahead and you just execute it and you just follow the rules. And if your rules imply using a stop, you just take that execution, okay, mechanically, like a professional trader. So super exciting to see that happening. And hopefully, guys, these great examples of trades that we put together together with the great example of you guys executing those trades with the AutoUFOs, you know, all of this together hopefully will help you all to growing as a trader and also growing your accounts. Okay, so very exciting and way to go. Okay, wonderful. So anyway, now today, what do we have today? Well, we're gonna start with a blank chart here. I got PayPal. It doesn't mean we're gonna trade PayPal. We're gonna do a little bit of analysis of multiple things. Also, just to give a little extra time to the people coming in at the moment, I want to give you a very quick summary of things you are supposed to know, but just in case you watch this recorded. Our main website, tradewithufos.com. We got a get together button. When you click on this button, it's super important because you get to see the calendar where you can see the future sessions that we're going to conduct. So the next one we'll get together on February 5. This will be for short-term trading. A very important day, especially if you are in Asia or related to Chinese culture. That would be a key day. So we'll be celebrating the New Year, Chinese New Year, New Fortune, and we'll be doing short-term trading. Okay, guys. So very important day, February 5. But anyway, here you can see the whole schedule of pre-planned sessions in front of us. Okay, guys. Our Facebook page, guys. If you are not connected with Facebook or you haven't clicked on the like button, please go ahead and do it so we can communicate better. Same with LinkedIn. If you are not connected with LinkedIn or you haven't clicked on follow the Trade with UFOs page, please go ahead and do that. And the reason why, again, we post many trade examples. Okay, right here we have one beautiful example with Simone trading gold futures. Okay, but we have all sorts of examples, and every day we're posting trade examples. So these trade examples could be really powerful for you guys to learn better what you could be doing for yourself. Okay, out of observing trade examples from other users that are using AutoUFOs. Okay, so this could be a great way to get to have little aha moments and keep improving yourself. Okay, so every single day, we have another trade with Canadian dollar. If I keep scrolling down, there are so many trades. Okay, the YouTube channel. I'm not sure if everybody is aware of this, but we have classified in playlists our videos. So the get-together sessions, if you click, we got 18 videos at the moment in this section. And when you click in it, notice how they are sorted by date, but also you can see where they are. So, for example, the last Sunday we did sharpening, and it says options 1. The one before was January 28. That was short term. So you can see it's all classified here. So if you need to do a little bit of catch up, you can do that very, very easily. Okay. So very important. Subscribe to the channel so that way when we upload stuff, you are informed. But most importantly, make sure you click on the little bell so that way you are actually not only subscribed, but you are also asking YouTube to notify you when new videos are uploaded. Okay. One last comment before we begin with the charts. People send us many emails asking how to get the app. Super simple. You just connect with the TradeStation App Store. So you would use, let me put this on the main screen. So you would just input on your web browser tradestation.tradingappstore.com. You will get into this page, and then what you would do is just type on the search box UFOs, click on the green button, and magic, as you have seen before maybe. Here is the app, and you can just go ahead and subscribe. Okay, that's it. It's that simple. Okay, so the moment you click subscribe, automatically the app shows up into your TradeStation. You don't need to do anything. Shows up in your TradeStation, and that's it. Okay. And by the way, one more comment I would like to make out of a few emails I have received recently. Look, there are many of you, and we need to do that more, by the way. Okay, we have been focusing a lot on options trading and futures. Okay, we're gonna be we need to look at the forex markets too. We're gonna be doing all of it. Okay, and expect more sessions as well to come in the future. And the more sessions we do, the more markets we look at. But we need to do a lot of forex trading as well because it's a key market. Everything we trade, for example, in this case, PayPal is currently trading at 88.16. Well, 88.16 what? It's $88.16, which is a currency, right? So no matter if you trade forex or you don't trade forex, everything you trade is a currency. So it's very relevant to understand the currency markets, even if you don't trade them. Okay, guys. So we'll be adding a little bit of forex to our life as well as we continue progressing all together in those get together sessions. So be ready for this. Okay, but so one comment that many people ask when it comes to forex is, wait a minute. The AutoUFO app is running on TradeStation. TradeStation provides forex charts. For example, if I type Euro USD. Here's the Euro USD chart, but TradeStation does not provide forex execution, right? So I just want to very quickly explain what's the solution for that. It's quite simple, actually. If you come to our subscribe page and you scroll down, here it has that to be able to use the app, you first need TradeStation. Again, TradeStation gives you access to forex charts, but not forex execution, right? So, you need TradeStation, either the full execution version of TradeStation or the analytics. Now, the full execution version of TradeStation does not allow you to execute forex. But the beauty is that it's free, right? So the platform has no software fees, no free market data for forex. So that's the beauty. Okay, the problem is that even though it says full execution, it does not allow to execute forex trading. So you decide if you want to have the transition analytics, where now you have to pay $249 a month, or you want to have the full execution version. But in both cases, in none of those two cases, you will be able to execute forex. So what many of our users are doing is they set up a full execution version of TrustStation, where TrustStation would require you to fund $500 in the account, but you don't plan to execute. So let's say you use a broker that gives you access to a MetaTrader 4 platform, or you use any broker, whatever platform they give you for forex, right? So what you would do is that you would load the forex charts on TrustStation, do your analysis with TrustStation, and when it comes to placing the orders, that's the only time where you will load the other platform just to place and input order parameters, entry, stop, target, the profit targets, all those things. But you will not do that with TrustStation because it's not possible. But the analysis is possible. So to have a very let's say efficient way when it comes to cost to have TrustStation would be just to fund an equity account with $500, which is the minimum that they ask you, and with no software fees and no market data, you get access to the TrustStation forex charts. Okay. So anyway, just phrasing all of this because every time we meet multiple times a week, right? But between sessions, we receive emails with questions, and I think it's always useful to be able to answer, taking advantage that we are connected in the get-together sessions. Okay. But anyway, time to trade options, my friends. So I have run the scan that we have here on the left. Okay, just in case you need a screenshot, I'm just loading the scan so you can see. This scan is looking for the top 50 stocks with the greatest premium in options, and meeting certain conditions. And the conditions that those stocks are meeting is that they are not trending stocks in a daily time frame. Okay, in a daily time frame, they are not trending stocks. The ADX is below 25. And those stocks are liquid with liquid options too. That's what this filter, this scanner is doing. So I run it before the session started, and I ended up with all those symbols. Now, the ones that are blue color means that those are new symbols that were not available before. The ones that are black color means that those symbols were available already the last time that we run this scan. Okay, this scanning process. So that was it means. Okay, but since we didn't run the scan together since the prior session that was last week, then I'm just gonna go ahead and work with all those results. Okay, we got 46 results, and I'm gonna work with all of them, and hopefully efficiently we'll be able to find one or two trades, and we'll examine the trade. We'll see if we like it or not, and if we like it, we'll place the order. Okay, that's the goal for the remaining part of today. Perfect. So now I'm going to mix technology with experience. Okay, so technology got me 46 stock symbols and ETFs. Well, ETFs are never my favorite choice when it comes to doing iron condor or non-directional options trading, because normally ETFs are quite quiet. And in one hand is good because that's what you want when you do non-directional trading. You want quiet markets. But in the other hand, everybody knows ETFs are quiet, and therefore the premium built in the ETFs is never too hefty, right? So you end up selling options and collecting little premium, and that's never too exciting. Is that making sense? So I would like to find opportunities with a little more risk, but also a little more reward, which is more premium. Okay, so I'm going to start looking at stocks going from top to bottom. And again, as I said, apart from the technology of the scan, the experience also tell me that, for example, stocks like Alibaba are stocks that many times they show a great level of options premium. So the first thing I need to do as well, and you probably heard me say that before, is to find out why Alibaba is in the list, because Alibaba has a lot of premium built in the options, and the question is, why is that? Okay, the question is, why is that? Because if Alibaba has a lot of premium built in the options because the earnings report are about to happen, well then, yes, I will be paid a lot of premium by selling options on Alibaba, but also I would be assuming a lot of risk because when the stock reports earnings, it is quite common that we end up with a huge jump in price, and this could bring the price of the stock to the area in the chart where it is not likely to go, but it may get there quickly because of the earnings report. So, in other words, I want to sell options. That too many people are buying for no reason instead of there is a reason why people are buying the options. Okay, so Alibaba had earning reports reported on the 30th. That was yesterday. So remember, TradeStation updates options data at the end of the day, which means that if these earnings reports on the 30 happen after the market closed, the drop on the premium in the options that happens after an earnings report will not be shown until after 2 days close. So even though the scanner got Alibaba, I am a little skeptical when it comes to planning a trade on that particular market because probably there is much less premium than expected. Okay, I can check this very quickly by looking at the options on Alibaba. I can look at next week, for example, the at the money strike. It's currently, what's the current price? 168. Let's go to 170. So the at the money price, the at the money strike got 33. 33% volatility. If I was to load the volatility, implied volatility stochastics, and I need to switch to a daily time frame because TradeStation doesn't show volatility values unless it's a daily time frame. So if I show implied volatility stochastics, it's showing 33, okay, 33. And you can see already that there has been some sort of a drop here. So 33, and this is showing 33. So yeah, so I guess that the earnings report took place. I probably TradeStation actually updated it. It was probably 30 before the market opens. So at the end, it was updated at the end of the day, and volatility went much lower. Okay, so I would like this line to be a little higher. Instead of being blue color, I would like it to be more in the purple colors instead of the blues. Okay, so Alibaba shows on the list because it's one of those top 50 stocks in the market with top volatility, but I'm not too excited, okay, because of what I just explained. So I'm going to look at another one, Baidu, which is a stock that normally has a great level of inflation or decent premium built in, but you can also see that the levels of volatility are quite low. And I'm pretty positive that we may have a similar situation with Baidu. And I'm doing this slowly at first, guys, so I share a little bit of what I'm thinking, so you guys get to understand that. But with Baidu, what happening actually is different. Okay, with Baidu, we have earnings report on the 14th, so we still got 14 days to go, and probably what's happening is that these may be about to rise, but hasn't risen yet. Okay, so maybe with Baidu, we'll come back and take a look at this a few days from now. Okay. So let me keep going down the list, and I'm going to just stop on the stocks that I know out of experience could be candidates. Okay, so for example, NVIDIA. Okay, I'm using briefing.com. I didn't say it just to look at the earnings report. NVIDIA got earnings on the 14th. NVIDIA, as you can see, is kind of in the middle. So ideally is up there, but you know, it's what it is. It's somewhere in the middle when it comes to the level of premium built in the options. Okay, but let me see. It says 45.98. Okay, but what's bothering me a little bit here is that NVIDIA went up 4.3% today, and what that means is that maybe, let me get the options window here. Here we go. And what that means is that, well, actually, we're pretty okay. 45 and 45. I was thinking, I mean, normally when a stock goes up, the traders that trade that stock become calmer. And when traders become calmer, then the level of premium in options goes down. Okay, so I was expecting that number to be a little lower, but to be honest, that number remains quite okay, quite high. At least aligned with the average. Okay, so it's not too bad. Of course, the next month, the next expiration date, which is February 15, got 58. That's so much better. Okay, but why is that? Well, because on the 14, we got the risk of the earnings. Okay, so if we were to trade Nvidia, we would want to look at February 8 expirations. Okay, so Nvidia is one of the stocks that we're gonna check in a minute. And the other one I wanted to look is PayPal, and I was looking at that one earlier, and I want to make a comment to you about this, again, just to share a little bit of what I'm thinking as I'm looking at those markets. So PayPal, as you can see as well, got a little bit of purple color here, so not too bad. Now, if I look at the earnings report, loading the earnings reports here, but with PayPal, just like earlier with Alibaba, notice how the results of the reports came out on the 30. So this, it's not ideal because you want to get that extra premium when that is available normally before earnings reports. But in this case, if you look at PayPal is dropping 3.94% today. Okay, so if you look at the 60-minute time frame, for example, PayPal is falling by almost 4%. And when stocks fall 4%, people normally get pretty panicky. Is that making sense? So I'm expecting here with PayPal that maybe we should be able to find a trade with certain level of premium. Actually, notice how the expiration date here on February 8, probably because of the panic of having that stock falling hard the way it is, notice how we got 31% volatility, which means that the level of premium built in those options is at a rate of 31% versus the other expiration dates, which is less. Okay, and the one that expired February 1st, just forget about it, guys, because there is 1 day to go, and this 51% means nothing. 1 day to go, it's basically it's over. But the next one makes a lot of sense to do a play like the one Supply and Demand Trader did with Expedia, where he sold those options that Iron Condor went over the weekend and got stopped out the next week. But because you got the weekend in between, he collected premium enough to end up making a small profit. So, we may be able to replicate the same with the extra advantage where this panic of having PayPal dropping so hard may have created a little bit of extra premium that we can see here with 31.8% here. Is that making sense? So I would like to go over two potential scenarios where we would do a trade with PayPal, number one, or Nvidia, number two. So out of the whole list, I could certainly go one at a time, and I'm pretty sure I would find more opportunities. But at the same time, just to keep the uses of our time to be quite efficient, I would like to propose that we work with PayPal and Nvidia today and see if we end up finding a market opportunity or not. Okay, with PayPal, there is no risk of earnings because the earnings already passed 2 days ago. With Nvidia, the earnings would be on the 14th. So in both cases, we're going to be willing to work with February 8 expiration, which is the next Friday. Okay, I mean, not tomorrow, but the Friday after, February 8 to be precise. Okay. How is it going, guys? Okay, so we started the session and I kind of share a little bit of things and thinking in my mind and so on. It's time for you to give me a little feedback. Let me know how you're thinking. Let me know how is it going. If it's going fine, just say fine. Just say okay or something like that. If you have any question, any comment, this would be the time for you to say it because I am about to plan the trades. Okay. By the way, also, question for everybody, and please reply on the comments box. Remember, if you're using eyes on, you need to kind of like, instead of using full screen, you need to go out of full screen so you get access to the comments box, and then you type, and then you can go back into full screen. If you're using YouTube, you can just type on the right side of your screen, right? But question. How many of you let me know, and also let me know how it went. How many of you attended the options sharpening session that we did last Sunday? I would love to know if you attended it, because of course many of you, I'm sure you watch it recorded, and I would like to get a little feedback from you guys. Okay, so I would really like that. Okay, and thank you for your responses, guys. So anyway, so let's begin with PayPal, since we have PayPal here, and obviously out of the bed we got a few UFOs here. We have a few UFOs there. Okay, so all of this is obviously to be respected, but also remember, we talked about that before. For whatever reason, there are certain stocks that are traded quite heavily by institutions after hours, okay, pre-market or post-market. So it's always healthy to switch from regular session to US stock with pre and post-market. Look at the probability. Notice how PayPal is giving us a 58% probability of those UFOs working well. If we activate pre and post market, where if we deactivate pre and post market and we only look at the regular session, the same settings for the UFO gives you 49%. Well, that's quite significant, isn't it? That's quite significant. There, it seems that there is a pretty different. There is a difference. Okay, there is a difference there, and we should not ignore whatever we do. We should go back and review as well with the pre and post market, because in the case of PayPal is relevant. You will also find at times that other stocks provide nothing important in the pre and post market, and actually the probability drops from 49 to maybe 35. Okay, in that case it would be okay to ignore pre and post market. Okay, and that's the beauty of having the statistical measurement here, because that way you know what is reliable and what is not useful, right? You know if pre and post market data is useful or not. Okay. Anyway, so what do we have here? Two UFOs. So I'm going to draw a line here, and what I'm trying to say with this line above this UFO is that above this line, it is unlikely for price to go there anytime soon. Okay, why? Because I got two UFOs on top of each other. Okay, if I was to bring another line and I was to place this other line using pre and post market, so this line would go here. So based on the pre-market data, it seems that we are not likely to reach 94, and if we reach 92.48, it's likely to, you got 58% probability of bringing it down. Okay, so the question is, if I sell 94, 95 options that expire in February 8, am I gonna get paid enough? Okay, that's the question. Okay, and I don't. Okay, so we are done with this trade. That's it. Very easy. It's been easy. It's been easy. Maybe, you know what, with this huge drop at the beginning of the day, maybe if you had looked at this earlier, we would have had an opportunity, because with the 4% drop of that stock, probably some panic kicked in. Okay, but it's not been the case, and those options don't seem to provide enough value. Actually, with PayPal, let me make sure I'm not making a mistake here. Yes, PayPal already reported earnings. I could give a try to February 15 to see how much I get paid, and still the 95s and the 94s are paying 20 cents, 17 cents, so it's still very little. Okay, so what we conclude here is that the fact that earnings already happened has hurt the amount of premium in the options. Okay, so good news, we're not gonna do it. So the beauty of the UFOs is that you identified it was the 95 you would have needed, the 94 or the 95, and those strikes don't have premium enough. Now, if you were to do it without the UFOs, you may have had a false sense of premium in the options, because let me bring this down to 10. So the options are on current price. Notice they have 27. Okay, they have 27, and then above they have 25, 26, 25. So there is less concern of that stock going up, where going down 88, 87, 86, there is more concern. It goes from 29 to 31. Okay, so it seems that there is some concern for the stock to go down, which makes sense because it's been dropping by 4%. So people are probably buying more puts than calls. There is a little, let's call it divergence with the premiums there, which is quite normal. But that increase based on the panic is not enough. Okay, so the good news was we didn't have the earnings in front of us, the earnings risk. The bad news is that precisely because of that reason, across the board, as an exception, the at the money strikes, okay, across the board, it seems we have a pretty big drop of options premium, okay? So we're gonna have to look at other markets. And the other one I said that could be good to check is NVIDIA, okay? So NVIDIA got 50% probability of those UFOs working well if you use regular session data. If we look at pre and post market, 52 become 48, okay? So it seems that the 48, the pre and post market data is less relevant, even though, it's still something to be respected. 48% probability is not 30 or anything like that. So there is some important accumulation of sell on field orders right below 160.5. If I go back to my regular session, I am actually looking at the same UFO, no matter if it's pre-market, post-market, or regular data. In this case, it coincides. Okay, so before we keep going, remember with NVIDIA, given the fact that earnings will be on the 14th, the further expiration date I could use is February 8. Okay, in a more advanced way on how to deal with options, and we will talk about this in the future. In a more advanced way to deal with this, we could actually use February 15. Okay, but since we haven't covered everything that we need to cover yet, I'm going to have to keep it simple to not to get anyone in trouble. Does that make sense? So I'm going to look at the 160.5 or something above, and this is providing, unfortunately, very little premium. That UFO is a little too far, and therefore we're not going to be able to use NVIDIA either. Okay, which I thought my first impression was better than what it turned out to be. Okay, so we're going to have to look at something else. Okay, we will. In the meantime, question from Team Trader. Let's take a look at Team Trader. Team Trader, do you have a rule for how much premium you want to see and how far out an expiry date? Yes. Okay. Rules for everything, Tim. Absolutely, and love the way you're thinking, and your question means that that's what you're asking. You want the rules, okay? So that's the way to think, and that's the way to trade. Now, for us to get to a point where I can lay out rules for you guys, we need to do a few more of the sharpening sessions to end up having a proper understanding of options trading, okay? And I'm gonna have to ask for a little patience for the traders that you may be advanced with options. Tim, I am not sure where you are at, but the way you phrase your question, it makes me understand that you have at least some options experience, and probably more than some. So I would like to ask you to bear with me on that, because we will certainly get there. Okay, but at the same time, I want to be able to provide material in a way that is easy to digest for all sort of traders, and some of you, I am aware that you don't trade options yet. Okay, so little by little we will get there. Okay, but we will get there for sure, 100%. Okay, so let's continue. Okay, so we got a couple of no's at first. Okay, and therefore it's time to continue looking for other trades. Okay, so here what I'm going to do, I'm going to put my website, briefing.com, on the right side of my screen, so that way I'm going to be able to easily look at the symbols on the left and type the symbols on the right, so I get to find out the expiration dates of those particular markets. Okay, so I am also pointing and typing first the markets that I know by definition could be more liquid, to find out more about the expiration dates. Okay, so notice that Philip Morris, that's interesting. Philip Morris shows in our list, but Philip Morris, which it's a little weird. Oh, here. I was not reading this correctly. Has earnings on February 7. Okay, so forget about it because the next expiration date is February 8. I was looking at this blank line and I didn't notice the date was right above. Okay, so forget about it. What else do we have here? Home Depot, HD. Again, I'm typing stocks that are stocks that are quite liquid, okay? Because of course you can always end up with trades, where you may have a great level of premium, but then the options are not liquid, and then the difference between the bid price and the ask price is so humongous that you taking the trade actually gets you in a very bad position, not because the trade is not good, but because the stock is not liquid. Okay, so that's why the symbols I'm typing out of this list, I am typing it out of experience too. So if you didn't have the experience, let's say you are new to trading, well, the first thing you would do when you select a symbol, for example, Home Depot or Philip Morris, you would come in here and look at the difference between those two values. Okay, 182 to 186, 153 to 174. Okay, and as a rule of thumb, I would say that you don't want it to be more than around 15% or something like that. Okay, it's okay. So 15% of 153, maybe what, like 20 cents or something like that. So 20 cents on top of 153 is 174. So it's more or less okay. Again, I'm giving you a very broad rule of thumb. Of course, in a perfect world, you want less than that, but you could take that as well, as long as the profit is big enough. Okay, so I know that Home Depot is a stock that initially I would say it's not the most liquid stock in the world, but it's not too bad. Okay, so if I load options on Home Depot, okay, you would be able to see that. Okay, so 286, 297, 163, 183. So you can see the premiums, are more or less under control. It's the spread, I meant the distance between the bid and the ask is not super amazing, but it's definitely not too bad either, right? Now, when looking at earnings reports for Home Depot, now it seems that we have time all the way to February 26. Okay, February 26. So these allow us to play with multiple expiration dates. We have February 1st, 8, 15, 22, and then we have March 1st. Now, of course, March 1st, which is the one lining up with February 26, right? That expiration date, as you can see, got 27, which is more than 21 and more than 25. So this one got built in the risk of the earnings. The other ones got less risk. Okay, and it does catch my attention that February 8 and 15 seem to have a much greater value compared to February 22nd. Okay, and February 8 is the one that has the greatest amount of premium, 25, at least as an average. So I would like to begin planning the trade using February 8 because of many reasons. First, because it seems to be the expiration date that shows the greatest level of premium. And when I sell, I want the greatest level of premium. So that's one of the reasons. Second, because the shorter the expiration date, the sooner these options will expire. And if you sell options and you collect premium and then you wait until they expire, then you keep the premium, right? So I want the expiration date to be close so I can do those trades more often and also benefit more efficiently from the weekend, because if the option expires in 7 days and the weekend is 2, well, basically you got 5 days of risk while you get paid for 7, right? Where if the option expires in 14 and let's say you get stopped out on Monday, so you enjoy 2 days of time decay out of 14 days. Well, 2 out of 12 is less efficient than 2 out of 7. Okay, so I would love it if we could find a way to make it work with February 8. But if not, I will certainly take a look at 15. And I would not really be too excited, but it could also be okay to look at February 22nd, because remember, the risk of earnings happens on the 26th, and that applies to March 1st. So up to February 22nd, it's okay. The ideal, it's February 8, 2nd, February 15, and the 3rd, February 22nd. So let's begin with the ideal. And to begin with the ideal, the process is going to be the same. So we have the 60-minute time frame here with Home Depot. First of all, let's look at the pre and post market data to see if that is relevant or not. 50%, my friends, that's relevant, okay? And if I go for regular session only, it is 49%. So actually, pre and post market data with Home Depot is almost as important as regular market data. Okay, so now when looking at regular market data, it seems that we got UFOs located around 195. I would like to compare this with the pre and post market data to see if we got UFOs closer than that. So yeah, actually with the pre and post market data, it's interesting because certainly we have that one there, but we also have this one here. Okay, so we have this one, we have that one, and we have that one. Now this line I'm just placing in the chart right now, the second line from the top. I believe if I go back to the pre and post market, sorry, the regular session, that line may be in the middle of the UFOs, exactly. So because I have, let me zoom in, because I have those two UFOs overlapping each other, when I talk about where I don't think the market will go, obviously 193.97 is not a good idea, right? The idea is you either bet the market will not go above those UFOs because the UFOs will bring the market down, or if you're going to rely on the pre-market data and post-market data, you would bet on the market not to go above 191.57, right? But the line that was in the middle of the UFOs, that one made no sense. Okay, so I'm going to leave those two lines. And by leaving those two lines, before I look at the green UFOs, I'm going to check with the option chain, what's the premium if I use February 8 and I sell 195s or 191. Okay, so 195s, notice here major spread, there is no liquidity there. And if I do 192.5, 190, so February 8 is not providing premium enough. On top of that, I got lack of liquidity on those options. Okay, so what about if I use February 15? So February 15 is providing 1124, which is not ideal, and 192.5 is providing 34 and 46, which is not too bad, but also is nothing amazing given the fact that we are dealing with a stock of $183 per share. Okay, so this basically puts us in a position where if we're gonna do this trade, we're gonna have to use the 22 of February. Okay, and when I look at the 22 of February, something catches my attention very quickly, which is the fact that the 195 got a big difference between the bid and the ask, where the 192.5 has much less difference. Okay, so in other words, if I'm going to be dealing with this trade, I'm going to ignore the 195 and I'm going to be focusing on the 191.57 just because of liquidity, premium available, potential for slippage, etc., etc. Okay, and I need to be careful with all of that because if I was to do what I'm just doing with a very liquid market, for example, with the QQQ ETF or the S&P ETF or something like that, or Microsoft, well, those stocks are so liquid that I can just pick any strike I want. But when I'm dealing with a stock that is less liquid, I really need to be careful to not to lose on the spread because again, if I show you one more time, if you're gonna sell this thing for 27. And then you have to buy it back for 47, it means that just because of going in and out, you lost 20 cents out of 27 cents, which is the most you would have made. It's quite crazy, isn't it? So now, the other thing that we'll do is, of course, we'll shave the spread and we'll place an order somewhere in the middle. So we should be able to get a much better price because Home Depot is more liquid than what it shows. But at the same time, you always want to think about your worst case scenario. So I'd rather sell the 192 call than selling the 195 because of that risk. Okay. Now, if I calculate the distance from 191.57 to the current price, which is 183, 55, we're talking about $8 of price movement. If I project this to the downside, that brings us down to 183.55. And I would like to know what's available there when it comes to UFOs. I say 183, oh, sorry, 183.55. So silly of me. Sorry, guys. 183.55 minus 8. That's 175.5. So 175.5, what do we got? What do we have there? So 175.5 is around there. If I have these two lines, it's more or less equal distance. I got one green UFO, two green UFOs to defend myself. What about the pre and post market data? So the pre and post market data only show one UFO, not two. But you know, the regular session hours, which is just as relevant because it's 50% as well, or 49 something, 49.87. So it's showing, you know, those two UFOs. Okay, so you know, that would be a valid location for the bottom part of my range. And basically, what this trade would consist of is we would be expecting this market to remain between 195.5 and 175.5 from now until February 22nd. Okay, so now is here. One sec. Now is right there. This is now. And if I move to the right a little bit, okay, I don't think I'll be able to draw February 22nd. Maybe yes. No, I cannot. I will need to add more space to the right. So if I add more space to the right, now yes, now I can move this thing to February 22nd. So February 22nd is there. So basically what we are saying is that we're going to do a non-directional trade where we expect Home Depot to remain in this anywhere within the green box, okay? And above the green box and below the green box, it is unlikely for this market to go there anytime soon because of what we said, okay? So that would be the plan, okay? That would be the plan. Now, would that work from a risk and reward and premium collected, etc.? Let's take a look. So I'm gonna change my spread type from single to Iron Condor. I'm just gonna right-click, analyze, sell an Iron Condor. Okay, I have prior Iron Condors executed here from before. So let's go ahead and not there, here. Okay, so let's do it again. I'm gonna come in here, sell Iron Condor for Home Depot. Here we go. And now I'm gonna have to set my upper and bottom range. So 191.57, I think we said. Was it 191.57? Right here. Yes, 191.57. And then we got 175.5. Here we go. So 191.57, 175.5. And in the middle, with black color, I got the current price, which is the last. Okay. So now, how do I build an Iron Condor? And again, we never had a lesson on this. Okay. So, you know, bear with me and we'll talk about it. So to build an Iron Condor, I am going to sell calls above and buy calls above. So I'm gonna buy, let's call it for now 192.5 call, and sell the 191.5 call. Actually, the 195 does not exist. I think it was the 192.5 call. 192.5 call, and therefore above we're gonna have to buy something else. Maybe 195. We need to decide that. I'll go to the option chain in a minute and we'll decide that better. In the bottom part, we could sell the 175 put, and then we could buy as a protection the let's call it 174 put. Okay, let's see what's available. Okay, so I just wrote it for you to kind of understand the construction of the condor. But now what we need to do is to come up with specific strikes. Okay, so let's look at what is available on the chain. Okay, I'll go back to single. So on the bottom part, we do have the 175, and below we have the 72.5. So, you know, I have the same concern I said before. So 92, 112 is a nice premium and a reasonable spread. But 24.90 is absolutely not reasonable. Absolutely not reasonable. So the most reasonable one comes here to 167.5. So if I do 175, 167.5, right? So the distance between that, 175 to 167.5, is $7.5. If I was to add $7.5 to my 192.5 call above, that would be the 200 call. Okay? Now I'm curious to see if the 200 call will be illiquid and problematic or not. So let's take a look at the 200 call. And I mean, 5 cents to 15 cents, I guess we can live with that, isn't it? Where if I do 192, 195, again, 47 to 27, you know, I'm not so happy. Okay, and I know here it's kind of the same. It's just a little better with the 167.5, but hey, that's what we have. Okay, and by the way, when we place the order, we're gonna be shaving this. Okay, so let's try and see what happens if I do 167, 172, and then I do the 200 above, and I do the 192.5. And by the way, I made a mistake with the put. It was the 175. Here we go. We have it. So what happens if you do this trade? Well, if you do this trade, okay, it's looking like, let me make sure I got everything good here. So now to your list expression, very good, good. So if you do this trade, it's looking like you're gonna get $96 per contract if you don't shave. You could get up to 150, which is not gonna happen. The mid is 125. I would say I would go for that. Okay, I would go for the mid, because since we are in a situation with a little bit of lack of liquidity, you definitely want to be demanding with your order and your executions. If you were to be in a situation where there is plenty of premium, plenty of liquidity, well, then you miss a few cents, not a big deal. But in this case, a few cents may make a difference. Okay, so I would place an order for 125, 120. I would not go below that. Okay, by default, the market price is 96 because the ask price is 96. So if I want to sell the condor at market price right now, I could get filled at 96 immediately. Not a big issue at all. Okay, but again, we have a little bit of a spread problem. From 96 to 153. We're talking about a bunch of cents of difference. Okay, so be demanding. I would say go for 125. Okay, and if you do that, you would end up with a scenario like this: 125. And if you were to be in a scenario like this, it means that if you're right, you're gonna make 125, and if you're wrong. And this is assuming that you're going to use stops, because again, we need to talk about other ways to deal with the condors. But if you're wrong, you would either lose 105 or lose 92. Okay, which by the way is the way we like it to see it, where the bottom part loses a little less than the top part, because if the market was to fall, typically the options will gain a little premium. And this could be problematic. Okay, but in this case, it's great because even if the options gain a little premium, the initial calculated risk is less than above. So if it grows a little, it may become 100 or something. Of course, we don't have a crystal ball. I don't know exactly what the number would be, but let's say it would be 100. So you are kind of equalizing the top and the bottom, because we know that when stocks fall, options inflate in value because of the effect of people getting panicky and everybody buying options like the world is ending. Okay, so this is what we have. Okay, and it's kind of a little is a trade that begins as a one-to-one. Okay, a little better than one-to-one, which is great for non-directional trading. For other types of trading, of course, classical trading knowledge, would suggest that you go for 3-to-1 and things like that, and certainly that's what you should do when you do directional trading. But when it comes to non-directional trading, it's okay to be a little more relaxed, because what happens? Well, tomorrow, next thing you know, if you get stopped out above, you lose $4 less. If you get stopped out below, you lose $1 less. That's your theta. Okay, and next thing you know, you get in the weekend, and now you got $4 more. So what's going to happen? Now, next thing you know, 3 days later, you get stopped out above, and instead of losing 104, you lose $12 less. And by the way, theta accelerates. Today is 4, tomorrow is going to be 4 point something, next day is going to be 5. So again, as time passes, your one-to-one reward to risk ratio trade will improve. And because of the distance between current price to all the way where the blue line is, you almost, unless something crazy, really unforecasted happens, it's going to be very difficult. I was tempted to use the word almost impossible. I'm not going to use that word, because traders will never use that word. But it would be, if I was to use the language of non-traders, I would say it would be almost impossible to hit the blue lines in 1 day or 2, right? Because they are too far out. So you are almost guaranteed a bunch of days of time decay. And if you end up losing in this trade, if you end up being wrong on the trade, meaning surpassing the blue line above or surpassing the blue line below, like it just happened to supply and demand trader, he got stopped out and he made a profit, right? What was the magic there? Well, the beautiful theta, the beautiful time decay. Okay. So guys, we got a trade, and it's basically the end of the session at the same time. So I'm just gonna go ahead and execute this trade. In my case, just so you get to see the execution happen, I will enter the trade at a disadvantage. I will go for market. Please never do that, but I will do it with market. So what I'm gonna get myself is 96. I will not get the 125 I was suggesting. Make sure in your case you are a little more demanding than me, but I'm just gonna place the order. Yes. Oh, wait a minute. I'm in my mind, the market was going to allow me to execute the trade. That will be tomorrow. So I will just say yes for the trade to be executed tomorrow, and as the market opens tomorrow, this trade will be executed. Little extra tip. You know what? Let me do this. A little tip when this happens, so you don't get hurt. Let me get the trade manager window here. I want to cancel the order, and I want to replace it in a different way. You will see. This is something important, guys. So cancel the uncount order. Yes. That's it. So I'm out of this order. Let me close this thing. I'm getting back into my... Oh, yes, I'm going to have to replace. Sorry, guys. Aaron Condor. I'll do it quickly because I believe I remember everything in my mind. So we said 167.5. We said 175. We said 200, and we said 192.5. Here we go. So this is the condor that we want to execute with 96 cents. So by the way, this probably is the reason why also some of those, the fact that the market is closed is also the reason why some of those strikes widen a little bit the bid-ask spread, okay? Even though I said at the beginning part of the session, guys, it's kind of funny on how sometimes the mind works. In my mind, I was going to still execute the trade. That's how excited I am. But anyway, so guys, when you are in a situation like this, which, by the way, this happens all the time when you guys are planning trades for longer term, okay? For short-term trading, normally you are in front of your computer and you execute, and that's it. But for longer-term trading, it could be quite common. Maybe you're a busy person and you look at the markets in the evening and then you want to execute next day. So here's something you need to know. When the market opens next day, the spreads that you see here, they're going to widen even more. Right at the open, the market makers know that many of the uneducated traders that may have read a couple of books on options, but they are not professional options traders. Many of those guys, they may place orders right at the open. And what happens right at the open? Well, they will take advantage of them by maintaining those spreads very wide or even wider for a few minutes. Okay, so one thing you could do to avoid that extra effect of the spread widening right at the open, something you could do, TradeStation is great, when you place your order, okay, and you do it the way I said, so you go for 125, right, and you place, one order, or you do all of this. One thing you could do is to activate with an activation rule and activate the time you want the order to be executed. For example, maybe you want to execute the trade at 9:33:33 local time. Okay, so now if you are in New York, 9:33:33 is 3 minutes and 33 seconds after the market opens. So what happened at that time? Well, it's still the beginning of the day, isn't it? It's 3 minutes into the open. It's just the beginning of the day, right? But what happens after 3 minutes and 33 seconds? A lot of trading already happened. So naturally, the spreads had narrowed, and now you will be able to enter the trade without suffering any pain on the widening of the spread that happens at the market open. Okay, so now let's say you live in California, so you make this 6:33 a.m. Why? Because it's local time. Okay, let's say you live in Singapore, so you make it 10 p.m. 10 p.m. in Singapore, it's 9:30 in the morning in New York. Does that make sense? So depending on your local time, you just specify the right value, so you can execute at the right time, right at the market open, and you just click OK, place order, and that's it. You're in. Okay, so it's quite simple. It's really not complicated, and that would save you a little bit of a problem. And it also allows you to do your planning of the trades during evening hours, if this is compatible with your life, and then execute next day at the open while you may be commuting to the office if you happen to work in an office. Okay, supply and demand trader, a message from you here. Thanks, Jose. I plan to use AutoUFOs to help me reconfirm whether the trade is valid tomorrow when the market reopens, and will take in my live account. Wonderful, and that's exactly, and I congratulate you, supply and demand trader. I'm loving the results you're getting and your level of engagement when it comes to trading. Okay, so that's how a trader becomes a good trader. Okay, and you were a good trader already, but now I would say even more. Sorry, guys, I had to clear my throat. So wonderful to spend this time here with you guys. The session today is concluded, so I'm gonna close the room, and I will see you next time. Remember, next time is I think I said February 5, but let me reconfirm. So next time will be February 5, 9 a.m. US Eastern Time. We'll be doing short-term trading. We'll be focusing on the Forex markets and the futures markets, and we'll go from there. Okay, guys. Again, take care, my friends. Sinin Kuala for the Chinese speakers out there, and maybe not the best pronunciation, but happy Chinese New Year for everybody. See you soon. It was a lot of fun today, guys. Take care and talk soon. Bye-bye.